How's it going, everybody? It's Stas here. So in this video, we're going to be breaking down the heavily debated topic of dividend investing versus growth investing. Which one is better for you? Of course, from my perspective, from my opinion, somebody in their mid-20s. And I also want to break down taxes, right? Because when you're getting dividends, you got to pay taxes to good old Uncle Sam. And although I'm not a financial advisor, I'm for sure not a tax specialist. I'm going to be breaking down this from my opinion, from my perspective. So sit back, relax, take a sip of your coffee, go down below, get 2 stocks from Webull. All you have to do is use my link, deposit $100, and we each get 2 stocks up to $1,600. And feel free to check out my Patreon if you guys want to keep up with all my moves in the stock market. And with that being said, let's get right into the video. So I've broken this down into 2 sections, right? First, we're going to talk about dividend investing, and second, we're going to talk about, you guessed it, growth investing. And of course, I'm going to sprinkle my opinions in this video because it is my YouTube channel, right, guys? So what are dividends, right? What are dividends? These are earnings paid out by a company to you as a shareholder. So let's say, for example, you own a stock, let's say Johnson & Johnson, for example, ticker symbol J&J. This company is making money every single quarter, every year, year after year after year, and they have the decision, they have the choice to either take this money and reinvest it back into the company, right? And we're talking about profits here, their earnings. They can take these earnings and reinvest them back into the company, or they can pay out a portion of these earnings or a majority of the earnings, it depends on the company, to you as a shareholder in terms of dividends, right? And when they pay these dividends to you, they get taxed on those dividends, and then you, as the receiver of the dividends, you also pay a tax as well. So essentially, there's double taxation going on here when you are receiving a dividend. Again, the corporation pays tax and you pay tax depending on your tax bracket, which we will get into later on in this video. And in my opinion, when it comes to dividend investing, it's best to get involved with this when you've already built your base of wealth. When you've already made a couple $1,000,000, couple $100,000, that is when it's best to put this money that you've built into a more dividend-oriented portfolio. And no, I'm not saying if you're a younger person, stay away from dividends completely. That would be completely hypocritical because I own dividend stocks myself. But when I'm looking at a portfolio from a younger person's perspective, I believe it's more wise to have a majority, or let's just say more of the portfolio in growth-oriented companies that have 10, 15, 20 plus years of growth ahead of them versus dividend-paying companies where their earnings are slowing down, the revenue's slowing down, they're more in the maturity phase of the business cycle where they can't really put the money back into the business in terms of reinvesting earnings to produce more revenue and profit. They're more just looking to pay out dividends, and the growth in general is slowing down for those businesses, right? And again, the idea here is, as you're a young person, you're investing, you're making money through your job, business, whatever, side hustles, you're growing your income and you're investing this income. The idea here is to keep as much income away, or as much gains away from the IRS, because when the IRS is, taking away money from your accounts, it's ultimately shrinking the value of your account. And when do they take money? Well, when you get a dividend, they take some money out of your account from the dividends you are making. When you sell stocks, whether it's a long-term capital gain, a short-term capital gain, they're taking money out of your account because they have to have their fair share, the IRS, Uncle Sam, right? And when it comes to dividend investing, there's 2 different types of dividends, qualified and non-qualified dividends. There's a big difference when it comes to tax purposes for these 2. Qualified dividends are taxed at the long-term capital gains rate at 15% or 20%, depending on your tax bracket. I'll show you guys a chart here in a second. And qualified dividends include companies that are U.S. companies and companies that also come or are in U.S. possession, foreign companies residing in a country that is eligible for benefits under a U.S. tax treaty, and foreign company stocks that can easily be traded on a major U.S. stock market. So you have to do more research for yourselves, guys, when it comes to qualified taxes or qualified dividends, right? And non-qualified dividends, remember there's a big difference here, include dividends that are paid out by real estate investment trusts, also known as REITs, and these are taxed at higher rates. These are taxed at the regular income rate. So whatever your ordinary income tax rate is, depending on your income, that is what you're going to be taxed when it comes to non-qualified dividends. Now, take a look at this chart here, and you're going to see how much you're going to be paying in taxes depending on your income to the good old IRS. So you can see here, based on the left, you have the tax bracket from $9,700 all the way down to $50,000 or $510,000. And on the right of that, you have the tax rate on regular income and tax rate for qualified dividends / capital gains. So essentially, if you make under $39,375, roughly $40,000, you're not paying anything in terms of capital gains or qualified dividends. But on regular income, you're paying 12% if you're between $9,500 to $39,000, and you're paying 10% on anything under $9,700. So let's say you own a REIT, you're going to be paying 12% in dividends on or taxes on those dividends. So let's say, for example, you make between $39,400 to about $434,000, you're going to be paying 15%, a flat 15% on qualified dividends and capital gains. But look at this. If you're getting REIT money, dividends from REITs, you're going to be paying anywhere from 22% to about 35%. So let's say you're making $250,000 per year, you're investing in REITs, you're going to be paying 35% of that dividend money back to the IRS. So you guys can see, if you're making a lot of money in dividends, you're going to be paying a good amount of taxes to the IRS, especially if you're making money from REITs. And again, qualified dividends, they're a bit less, about 15%, up to about $435,000 in income. And if you're making $510,000 or $430,000 or more, you're going to be paying about 20% for qualified dividends. So at the end of the day, if you're investing in dividends, you are going to be paying money to the IRS, which is going to be coming out of your account and thus shrinking your account in a sense. And the idea with growth investing is, let's talk about some growth investing tactics here, or, in general, what growth investing is. You're investing in businesses that are obviously growing. Remember what I said about dividend investing? A lot of these companies, sure, Apple, Microsoft, MasterCard, these companies pay dividends. Well, Microsoft pays a dividend, but they're still growing. But you have to realize their dividends are tiny, right? And these are the companies that are growing and they pay dividends, and those are a bit more, that's kind of a gray area. But for the most part, companies that pay a fat dividend, think of AT&T, Altria, think of tobacco companies in general, think of some healthcare companies. These businesses are not growing much. So you're getting a nice dividend, but you're losing out on the growth. But with growth investing, you're not getting a dividend. You're not paying taxes to Uncle Sam on those dividends. You're only going to pay when you sell the stock, right? And if you hold over a year, you're going to be getting taxed at the long-term capital gains rate, which is 15 to 20%, which is pretty solid, right? So when you're a younger person, I think investing in growth is a lot better when you have 10, 15, 20 years ahead of you. Well, even more than that, hopefully, guys. I mean, knock on wood, right? And when you have a long ways ahead of you, investing in growth is the way to build your your wealth, and it's the way to protect your wealth from the IRS. And I forgot to mention tax advantage accounts. You know, if you're investing in a Roth IRA, your dividends, you're not going to get taxed on those. So every gain you make, whether it's dividends, capital gains within a Roth IRA, which is why I love the Roth IRA, you're not going to be paying any taxes on that. So if you're investing in dividends in a Roth IRA, I can't say it enough, no taxes are going to be taken out. Well, of course, if you withdraw, you're going to get penalized. Then you're going to have to pay taxes on those gains. That's a whole different story. But if you're not withdrawing from a Roth IRA, if you're not taking out the gains you've made, and you're just continuously buying, you're not going to pay dividends or taxes, rather, on anything, dividends or capital gains. So if you're a younger person, it's best to avoid paying taxes on dividends and just continuously buying those growth stocks, which if you pick good growth stocks, let's say Amazon, Square, Tesla, and you're paying reasonable prices for these, you are going to do very well long term. And once you come to an age, let's say, and this is all relative, by the way, let's say you're 40, 50, 60, 70. It's all relative. Once you've built a massive amount of wealth, which is the goal of the stock market and any investing vehicle, right? Once you've built a lot of this wealth, you can then go to less risky assets, some of the assets that pay bigger dividends, that are more stable, less volatile. Think of the healthcare companies, bigger blue chip stocks. That is where you can start putting money into the dividend stocks and start going more from a heavier growth portfolio to a heavier dividend portfolio. And then you're going to start making a crap ton of income from dividends. And this will allow you to maybe live off of these dividends, become financially independent so you don't have to work anymore, and then you can do and pursue a passion. Let's say, for example, you are working a job that you don't like, but you're working it because you have to pay your bills. If you are growing your money with growth stocks over time, and let's say you have a couple $1,000,000 by 40, 45, 50, whatever, you can then retire, say, screw that job, and then invest that money into dividend paying stocks. And then all of a sudden, you're making $10,000 a month in dividends, $5,000 a month in dividends. And you're like, holy crap, I don't have to work this job anymore. I can literally invest this money, get the dividend, and then pursue a passion, a side hustle, start another business that you want to start, and you're not really a slave to your job anymore, if that makes any sense. So I don't want this video to be too long, but overall, that is my opinion. Dividend investing is great, but I would focus more on heavier dividend investing once I've built a good amount of wealth. And again, that's all relative to you. You have to ask yourself what that number is, whether it's 500,000, a million, 10 million, 100 million. I don't know. It's all relative. So yeah, dividend investing is better later on in life, in my opinion. This is all my opinion. And growth investing, you should focus on that more in your 20s, 30s, and heck, maybe even in your 40s as well. It's all relative to you. So that's it. I hope you all enjoyed the video. If you did, smash the like button, subscribe, drop a comment, let me know your thoughts down below, and make sure to check out my Patreon if you want to keep up with all my real-time moves in the stock market, whether it's trades I'm making, stocks I'm buying for the long term. That's all on Patreon. And if you sign up for the top tier, you get a morning update video every single trading day. So check it out. Link down below. Don't forget to also get your 2 stocks from Webull up to $1,600 and your $30 from M1 Finance. All of those are linked down below. I'll catch you all in the next video. Thanks for tuning in again. As always, keep crushing the market. Stay safe out there, guys. Peace out.